Hey there, it is the time of the month where we like to take some time to do a market update on more national real estate trends and what's going on versus the other report we do each month if you follow us, which is more specific to the Athens area. We are going to have some Athens content in this one for sure, but if you're someone that's interested in moving to the Athens area, the counties around it, Oconee County, Jackson, Barrow, be sure to click subscribe. We provide information on the real estate market and homes for sale. We also do a weekly prediction contest for the football season. So we're doing a lot of videos right now as it is October, but this is a pretty important market update for us and for anybody that follows us because we've probably seen, in my view, maybe the most turbulent 30 to 45 days in the real estate market in quite some time, just because of news and interest rates. So what we're going to try to do is we're going to answer that question that's on the mind of a lot of people: is home depreciation imminent? And how bumpy is the road ahead? So we're going to talk about a few things like that and kind of, talk about what people are saying, what we're seeing, and what we do our best to try to give you some good information to make decisions. I'm going to start with a quote from Mark Fleming, who is chief economist of First American. When the economic uncertainty dust settles, those buyers and sellers who were on the sideline will jump back in the housing game. Demographic trends support elevated purchase demand in the years to come. So it's a question of when, not if, for the housing market. His point there is people will jump back in the market at some point for those that have jumped out, because that's one of the things we're going to cover. Now, mortgage rates rising. This is possibly just a reality that's going to happen. As you know, we've seen a big jump in interest rates. There's a lot going on economically that I understand it a lot more now than I did 5, 10 years ago. I'm no expert, and there are a lot of opinions. I wish we had that perfect crystal ball that I could tell you exactly what to do in the stock market, what to do with your house. But what we can do is we try to take as much information in what we see and then, try to give you that information to make an informed decision. Now, what we are seeing is a lot of headlines in the media. And folks, let's just be honest, the media is entertainment. News is entertainment. It's headlines that are meant to get you to click on them, headlines that maybe put up something out there that says something, and then when you actually read further in, you learn that it's not exactly as the headline told you. How many times do you click on something to learn that? Well, the market is not in this terrible condition as they would have you believe. Interest rates are going up. The Fed's funds rate is going up, but we are getting business done still. So talking about mortgage rates, as we said before, 2022, the entire story of real estate this year is about mortgage rates. I can say here in the Athens market, it has been a turbulent year in numerous ways. It has been turbulent in interest rates, turbulent in what's going on, turbulent in agents and business transactions, turbulent in new companies, all kind of turbulence. But what we've seen here, here's a little bit of good news. You see that red arrow? We've seen the sharpest rise in interest rates, and I couldn't even go back. It's historic, almost doubled is what we've seen since this time in January. So more than doubled. So my point here is there's going to be some quotes, and I agree with them. We've been in this for a while. So it's actually, we've got some of it behind us, and we may have the biggest jumps behind us already, while we may see increasing rates may not jump this drastically. Get into a few more quotes here from some more chief economists. One of this at First American. The aim of the Fed tightening is to curtail demand in an effort to tame inflation when it comes to the housing market, and the Fed's actions are working. So this is all about inflation. As you know, you feel it when you buy gas, when you buy food, when you buy anything. Frankly, if it costs a farmer 200% more to pull something out of the field, it's going to come to your shelf. We're having all kinds of problems that are being caused by COVID, being caused by policy, being caused by politics, being caused by numerous things. No one person's to blame, but there is a lot going on causing inflation. They are trying to tame inflation by raising the Fed funds rate. Home sales, both new and existing, are falling. Builders have cut back production in response to rapidly declining affordability, and annual house price growth has slowed from the peak of nearly 21% in March to 16.7% in July. But that's still good news because it's going up. And you see where they're talking about these builders cutting back production? That's going to have something that I might want to bring up a little later. Another quote from another senior economist, this one at Realtor.com. While even 2 months ago, rates above 7% may have seemed unthinkable, at the current pace, we can expect rates to surpass that level in the next 3 months. Right now, they are thinking that they're going to continue to raise rates, and right now that is every indication. However, there's something that other people aren't talking about. They're going to do all they can to tame inflation. There's also the increased value of the dollar. I don't know if you paid attention to it, but the dollar is significantly higher than it used to be. And when these other countries are going to have to pay their debts with increased rates against the dollar, it might have an impact on their ability to pay their debts. So we don't know what the future is going to hold. Right now, we think those rates are going to keep going up. There may come a reality where the Fed has to dial back a little bit of that talk because of the value of the dollar and its impact on the global economy, with other countries have to pay their debt. That's just something to keep in mind with the rates going up and the strength of the dollar. There's no doubt that the increasing mortgage rate will make the home buyer even more challenging. Buyers may still find opportunities as these changes coincide with the time of year when buyers have historically found the best market conditions, which usually the best market conditions are going to be September to December, because there's less buyers, meaning there's less demand. So there's a less pool of competition. Now, this is another economist at Realtor.com. And I can tell you, we're seeing that in our market too. Our company is unique in that we don't specialize in only investment property. We don't specialize in only luxury homes. We have kind of across the board, we're selling over 1 million with some agents, and we're selling under 300 with some other properties. So at the moment, we're staying pretty busy, nowhere near like the frenzy before, but right now we're seeing a lot of transactions still get done. While mortgage rates are expected to drift higher over the coming months, much of the rapid increase in rates is likely behind us. This is again from Mark Fleming. That's alluding to what I said earlier, that we think actually some of the sharpest jolts to the system or to the market have actually already occurred. Let's go here. What is ahead for home prices? And this is a big thing that we're going to talk about, because there's a big narrative out there about depreciation and what's going on with mortgage rates. And most of you primarily just care what's going to happen to prices. So let's talk about that. The root issue of what drives house prices is always supply and demand. What's happened before that we'll cover? It. Bigger demand than we've ever seen 2020, 2021 after the pandemic, or coming out of it, I should say, and one of the lower supplies. Things changed what people wanted in their home, where they wanted to live. We're seeing people shift from other parts of the country for various reasons, for lifestyle, for numerous reasons. And Athens, Georgia is one of those areas experiencing a lot of growth in new population. So we've seen that. And that's actually a quote from Dave Ramsey. This is one of these graphs that's telling you the story of how things are shifting. We are at a big point in the market where things are going to tilt a little bit. So we've seen this increased buyer demand, showers, no hardly any listings. Well, over the same time last year, we're down almost 13% in showings, and we're up 27% in listings. Now, that's active listings, because we're actually seeing a bunch of new listings come to market. It's the absorption rate of existing homes being slowed down. So less homes are selling. And part of that is because of price adjusting. And that's what we're going through, that I want to talk about and give a few examples. However, here's another quote from John Paulson, who was a hedge fund manager who actually called the 2008 market crash. We're not at risk of a collapse today in the financial system like we were before. It's true, housing is a little frothy, so housing prices may come down, or they may plateau, but not to the extent that it happened. So that's kind of what I want to get to too here in a second. It's the home price forecast. So let me explain something to you. There's some people that are saying depreciation, some that are, most are not. But what's going on is depreciation relative to what? Because actually, we're not talking about depreciation over last year. In March of 2022, that is the high point of the market. So you had a value of March 22, and then you had a expectation of continued gain in value. So we've had clients that have listed properties based in April and June and on a basis on the market before. Well, it might be worth 600, but you know what? Why don't we try 650? And then in the end, by the time we come down to 600, which was still 15% over the year before, the property sells, because we're actually rolling back a lot of these properties. Expectation of price before the interest rate, bring it back somewhere between 5 and 10%, call it 7.5, maybe 8% roll back from where your expectation of price was, which is still over 2021. But here's the home price forecast that are by several groups. I want you to notice we've got an average of all 6 here at 1.8%. Fannie Mae at 4% Freddie Mac, Mortgage Bankers Association almost 3%. Ivy Zellman is someone some of you might follow that's kind of big in the industry. She's actually gone out on a ledge and sort of said it's going to be a 4% depreciation. Now, one thing that people that provide this information to us, Keeping Current Matters, didn't note is when you make the big statement, you do get most of the media attention. It's sort of like if you call the biggest upset, people are going to call you up and tell you why. So average overall, we're not seeing depreciation forecast. This is another thing we want to talk about. Appreciation and depreciation forecast as we head to next year. This is looking at for MSAs. When I say MSA, we mean a metropolitan status area. Basically, Athens is one. Atlanta, you can think of places in the state of Georgia like Savannah, Rome, go down to Valdosta, Brunswick, St. Simons. Those are generally MSAs, whereas much smaller rural areas are not. So what it's saying here is the forecasted appreciation for these MSAs are significantly more to be appreciated, 258 from 1 to 3%, 151 from 3 to 5%, than what is being forecast by Zillow to go down in some of these other markets. And this is the source there is Zillow. What this means is what's going to be happening here is not going to be just a complete national thing. Where you live in your market is going to be unique. In the Athens area, we see things differently because of a college town, because of we have a lot of people wanting to move here because it's a little slower pace, but still provides a lot. So what will be happening in our market might be completely different than what happens somewhere, let's say, in the out west or in the Northeast. Let's go to the next slide that talks a little bit about what I just said. So the appreciation forecast, business counting analysts forecasting price change. As you can see, most of the analysts actually are looking for much slower appreciation, and a much smaller amount are calling for depreciation. So we're looking to normalize that appreciation, the appreciation level, which would be good. Again, a little pie graph showing you what we've got here with people that forecast depreciation in 2024, 2025, and 2026. The green are the people that forecast appreciation. So there's a narrative out there that all this is going to reverse, but it's a little bit in the numbers. What is it reversing to? Where is it going? Because it's going to somewhere still above the year before, which doesn't necessarily mean true depreciation. I got some graphs here that I want to go over that are local. And I took the time now. This is from the Classic MLS. Now, keep in mind, these numbers don't take into account something that was sold in an MLS outside of our area, or that was sold or maybe off market, maybe a for sale by owner. These are the numbers from the Classic MLS. This is Oconee County since 2018. So the average home sale each year, home price starting 370, going to 393, 414, 480, and then, believe it or not, year to date in 2022, we are almost at $600,000 in Oconee County. That is solely due to supply and demand, but that is a 37% increase. Now, I tell you what, if you did buy right here, you might have a concern about depreciation, but if you bought anytime in here, you probably don't have much concern because, as we alluded to, with the rise in interest rates, a lot of builders are dialing back, and we're probably not going to see an influx of the home supply. Let's go to Clark County, 39.7%. So this is, again, the MLS, the average home sale price. Keep in mind, Clark County has a lot more condos and things of diverse type of housing. So the home price started much lower at $215, 2018, zipping up to $356,000. Now, while the numbers aren't as big, the increase is actually bigger at almost 40%. Now, see, this is the thing I want to show to you. If we're talking about depreciation, okay, let's say it does go back, but relative to what? So what I was explaining before is we've had listings that when we went to market, we sort of said, well, it's probably best priced at 700, but you know, the way the market's been, why don't you try 750 and we could always come down? And in the previous market, those numbers were working because there was such a pent-up demand. Well, as interest rate rose, demand slowed. You're actually rolling back to your March, February number. So you're actually still looking at appreciation over the year. These price drops are not reflective of actually values going down. They're reflective of the value never having been there. That's what I'm trying to get across to you. Now, another quote from a first economist over here at First American. Households own $41 trillion in owner-occupied real estate, just over $12 trillion in debt, and the remaining $29 trillion in equity. That's amazing, and that is the largest national loan to value. Homeowners had an average of $320,000 in inflation-adjusted equity in their homes in the second quarter of 2022. It's an all-time high. So that's a great thing. That's why this is different. We are going to have some changes, rising interest rates. We got to deal with inflation. You know, these are real economic things that have to be dealt with, but this is not going to be a housing crisis. For many households, home equity is the only source of wealth creation. As a result, recent record gains in equity and record declines in loan-to-value ratios will provide many owners with a financial buffer in case conditions were to worsen. Because that is one thing. We have seen something historically that we've printed so much money, 40% of the world's money, I'm told. We have supply chain problems. We have energy problems across the country. They're bigger problems, and I think that we're actually better positioned, some homeowners, to handle this. We just might see less transactions, and hopefully we'll find a way to get inflation under control. Homeowner equity gains, and this is from the second quarter of 2022. Georgia is 65,000. Even with this slight change in interest rates, because of what I told you about where price expectations were locally, I would probably say that's pretty accurate. I agree with that. That is good news. And one of the things I want to go back here, do you notice the appreciation in 2018, the appreciation difference, 215 to 230, 230 to 253? You see how these were modest, around 5% gains? That's before COVID. That's what we used to see. And we're probably going to be heading to a climate much similar to that, where we're looking at appreciation at a much more normal historical pace. And that would be a good thing. Now, here's the percent change of home prices since 1991. You need to never forget, we're not 25% gains like that. That's not normal. Real estate is more of a long game, and you need to understand that because we have a culture now with HGTV and people think about quick money, flipping houses. That's usually not the case for the homeowner. The increase in home prices from 1991 to today, 282% in the state of Georgia. National average, 290%. This is another problem that we've really got to address because of housing, because of everything and inflation. The cost of housing for rent is going up. So a lot of people get fearful when they see things like interest rates and they don't understand the whole narrative of what's going on. The problem with this is rent does not help anyone create wealth for themselves in the future. If you have to rent, I understand, and that's what you have to do for housing. I've been a renter before I was able to become a homeowner. But when you pay rent, it's all 100% interest. Whatever you're paying is just gone every month. When you have a mortgage, you're putting something into another pocket. That's what's so important for you to understand. Renting a house just to save you from having to worry about an air conditioner. If you can afford to buy a home and you know you're going to be in an area for a while, you probably need to find a way to buy a home. I'm going to end here with our group, Realty. They have a lot of ways to help you. What we're doing now is we're actually seeing a good bit of transactions still, and it's really seeing some different products go out from lenders. We have good contacts that can help you. Right now, it's more important than ever. You need to find someone that actually has experience or access to experience in real estate because it's different than it's been, and you're going to need a good lender contact. You're going to need a good realtor contact. Info at 5M Realty. Be sure to click subscribe. Probably our longest market update I've ever done, but I feel like this is probably a good time to have one at this length. I hope you have a great October. Happy Halloween. Go Bulldogs, and reach out to anybody here if you need help. Thanks.